A lot of them are unlisted. Even if they are listed, a large part of the revenues come from other segments, be it consumer appliances, consumer household products, etc. So, a very small part of their revenues come from stationery, and hence there are no large pure play stationery players except for a couple of them, which are maybe Fila and Delhi. So, these two are probably the only standalone stationery players globally. Hi, good evening, everyone. Hope everyone has noted down the next two FOF dates, 22nd May and 19th June. So, today we'll talk about the stationery and arts industry, especially in India. We'll look at the global background first and then we'll move to India. Surprised to see so many people after knowing the topic because there are not a lot of actionable ideas, both India and globally. Though there have been a few listings over the last year or so. So let's look at the global stationery market. Uh, so in FY CY16, the global market was around $170 billion. It went through a downturn in 2021 because of the COVID. It fell down to as low as $145 billion. But the longer term growth rate has been in the range of 2 to 3%, and it is expected to grow at the same rate in the next 5 years as well. So the reason you see CY22 numbers here is that a lot of listings happened in CY23, and most of the DRHPs that were there in that period covered the CY22 numbers. So I have written that. Now, within the global stationery market, about one third is the scholastic stationery. So, what all is included in scholastic stationery is basically everything that is used in schools. So, that would include your erasers, sharpeners, geometry boxes, pencil boxes, etc. Printing and writing paper is another one third of the market. Office stationery would include your staplers, punching machines, sticky notes, etc. Fine arts and scholastic arts are nothing but your crayons, paints, etc. Pen and writing instruments would be pencils, highlighters, and markers. That's around 9% of the market currently, which is expected to go to 12%. And this is the fastest growing segment, not only in India, but globally as well. Stationery adhesive is another 2% of the market, and hobbies and craft is a very niche market at about 1% of the market. Now, who are the consumers and what do they consume? Let's divide the market by age group and see. So, for children under 12 years, that's roughly zero point 0.9 or 1% of the world population. Sorry, zero point 0.9 billion or 11.7% of the world population. So, basically, they consume all the school stationery, paper stationery, art and craft products, mainly pencils, erasers, colored pencils, crayons, etc. Then, when we enter the teenage phase, where 13 to 19 years, the population is about 1.7 billion people at about 21% of the world population. There, you consume more highlighters, markers, mechanical pencils, notebooks, journals, etc. Then, for young adults between 20 and 29 years, that's roughly 15% of the population. Their pens, notebooks, planners, highlighters, sticky notes, etc. Then, as you enter the adult phase, which is about 38% of the population, there you consume more and more of papers, especially in offices, notepads, planners, glues, etc. Folders is a big segment here. And when you are a senior citizen, maybe you are into journals, scrapbooks, or you maintain notes of your daily activities. So these are the broad consumer segments that are there by age group. Now let's look at the global production. So about one third of the global production is in USA. Very closely following it is China at about 28% of the global market. Germany is the third one with about 10%. Japan is at 7. UK is at 4. India and Canada are at about 2.5% each. And then there are some other markets at about 15%. South Korea is one market which is growing faster, whereas other developed markets are stagnating or growing in the low single digit kind of a numbers. So was the CY22 numbers. When we look at the projected projections for CY27 or 5 years hence, uh, China is expected to be the larger producer. And if you see India, that is expected to go up from 2% to 4% of the global population. The reason behind this is that we have a young population, a lot of people going to the school, so the demand is higher, and hence more and more production will happen in India. Also, we are seeing some large scale stationery producers here, and they are tying up with some foreign players to tap this market. So, who are the large global players? So, Faber Castell is the largest player, followed by Stedler. So, both of these are German companies, and m- then followed by, so there are some Japanese players as well, like Muji, Kokoyu. Then, if you see, Maped is a French company. MNG and Delhi are Chinese companies. Acco Brands, Crayola, and Neville Brands are all the US based companies. Uh, if you see, very few of them are listed amongst these. A lot of them are unlisted. Even if they are listed, a large part of the revenues come from other segments, be it consumer appliances, consumer household products, etc. So, a very small part of their revenues come from stationery, and hence there are no large pure play stationery players except for a couple of them, which are maybe Fila and Delhi. So these two are probably the only standalone stationary players globally. Uh, so when I said a lot of the domestic players have tied up with the foreign brands, so just to give you some examples, Link Pens in India has tied up with someone like a Mitsubishi. Mitsubishi is a shareholder in that as well. And they've also recently tied up with Delhi to distribute their products. Uh, then you have DOMS who have partnered with Fila. Fila is a large shareholder in DOMS as well. You have Flair Pens, which has recently tied up with Maped for distributing their products in India. So there are a lot of tie-ups that have happened, and the domestic players are now gaining share in the global market. So, who are the major exporters of stationery in the global market? So, China and Hong Kong, as expected, is the biggest exporter at about 16.7 billion, followed by US. And then some exports happen from Germany, basically from Stedler and Faber Castell, which are the larger players there. And then UK, Japan, and India. India is roughly $500 million, but if you look at the numbers for the past 2 3 years, they have been growing rapidly and expected to grow faster in the coming years as well. So roughly 28% of the exports happen from China and Hong Kong, 20% from USA, 8% from Germany, and 7% from UK. Again, a lot of the stuff that USA and China export, some of it is imported by these countries itself. So uh, when I say they are exporters, they are importers as well. So some of them may not be net exporters as such. So USA imports about 11.6 billion dollars of stationery. China and Hong Kong at about $10 billion. Uh, India also imports about $0.6 billion dollars, and Germany and UK are at about 2.6 $2.7 billion. So 19% of the imports happen in USA, followed by China and Hong Kong at about 17%, and then you have UK and Germany at about 5%. If you look at the per capita consumption of stationery globally, Germany is the highest at about $228, followed by USA at about 180. UK is at 114. Japan is at 109. Canada at 100. Uh, China is at about $38. The global average is somewhere around 24, $25, and we are at $3. So here also, in terms of per capita consumption, we are very low compared to the global averages. If you look at the growth rates across the globe, as I said, in developed markets, the this market has been growing somewhere between 2 and 3%. In India, it's expected to grow at about 13-14%, and a large part of that growth is coming from the writing instruments part. So we'll look at it in detail in the future slides. China is something which is growing at 6.5%. So the two countries which are growing faster have younger population, and demographics are in their favor. So let's look at India. So who are the larger players here? The largest player is ITC Stationery, mainly into notebooks, papers, etc. Now they have entered into other segments of stationery as well. Followed by DOMS, which is a standalone stationery player at about 12%. Hindustan Pencils is a private company at about 9% share. So it has Apsara and Nataraj pencils. All of you would have used them. Flair Writing is a recently listed company at about 8%. Kokuyo Camlin is at about 7%. Luxor, again, an unlisted company at about 5%. Link is listed at about 4%. BIC Cello at 4%. Navneet Education, again, a different company, more into publications, curriculum based notebooks, exercise books, etc. Rorito is into pens at about 2%, and then there are smaller players at about 25%. If you look at branded versus unbranded, we have continuously seen the market shifting towards branded. So in FY17, about 29% of the market was branded, which has now gone up to 37% in the last financial year. And by FY28, this is expected to go up to 43%. So, if you bifurcate the Indian arts and stationery market into segments, so paper stationery is at about 42% of the market, 58% is non paper stationery. So, paper stationery would include your notebooks and standalone papers. Notebooks are at about 35%, a large part, 65% is papers. Uh, Out of non-paper stationery, which is 58%, writing instruments, which includes your pen, pencil, markers, highlighters, is at about 60%. Office supplies would be 21%. Art and craft is at about 5%. And others, which would include your technical instruments, adhesives, erasers, etc., are at about 40%. So if you look at the market size, the overall market size is at about 38,500 crores for CY23, which is expected to grow up to 71,600 and about 30% CAGR. If you break it down into different segments, writing instruments, which is the orange bar that you see in the chart, that is expected to grow the fastest at about 16%, whereas other segments are expected to grow at somewhere between 11 and 12%. So, roughly, the writing instruments market is expected to grow from 13,000 to about 27,000, doubling of the market in 5 years' time. So if we look at the presence of different players across different segments, so green are the boxes that you see. Those are the segments that these companies are present in. So if you look at DOMS, it's present across segments except for papers. So it's the most diversified players if you amongst all of them. Whereas if you see Kokuyo Camlin, it is into segments apart from notebooks, papers. Hindustan Pencils is mainly into pens and pencils, and now it has entered into technical instruments and in arts. Navneet Education, as I said, it's a different business. Luxor is again mainly into your writing instruments, pens and markers, highlighters, along with Link and Flair. Flair has recently entered into arts and hobbies, craft and hobby segment as well through Flair Creative. And now that they have a tie-up with Marped, which is a global giant in terms of creative segment, they will probably have more presence over there. Rorito is again pens, BIC Cello. The Cello pens that you see is not the Cello World listed company that you know of. So Cello World promoters sold off the Cello brand to a company which is called BIC Clichy, and it's now called BIC Cello. So that's the company that you see. And then after that, the Cello World company, which is the listed company, they started their own brand, which is now called Uno Max. ITC Stationery is present in notebooks, papers, pens, pencils, technical instruments, arts, erasers, sharpeners. Well, but mainly it is more of notebooks and papers. Kangaroo is only into office supplies. So, if you look at the brands that each of these companies have and the number of product categories that it is present in, DOMS has about four brands now: DOMS, C3, Ameris, and Fixifix. And recently they entered into the diapers segment as well with Wowper brand. So, the number of product categories are at about 11. Kokuyo Camlin has two brands. Camlin is your stationery and Camel is your art products. They are into 10 product categories. Navneet has two brands, Navneet and Yoga, and the number of product categories are 10. ITC Stationery has two brands, Classmate and Papercraft, and the number of categories are at 9. Flair has a lot of brands, but in pens mainly they have Flair, Hauser, and Pierre Cardin. These are the three main brands that they have, and their Flair Creative is their arts and craft brand. So they are into 9 product categories. Link Pens has four brands: Link, Pentonic, Uniball, and recently they started distributing Delhi products as well. Uh, they are they are into 8 product categories. BIC Cello has only one brand. Hindustan Pencils has Natraj, Apsara, and your Natraj pens. They are into 7 categories. Luxor has Luxor, Parker, Waterman, Pilot, and Snyder. Rorito has only one brand, and Kangaroo has only one brand. So if you look at the exports, which I said is growing rapidly, so from about 400 crores that has gone up to 573 crores, and it's 4,000 crores, it has gone up to 5,700 crores, and it's expected to grow to 7,500 crores by FY 28. If you break up that into different segments, registers, notebooks, and letter pads, which is your yellow bar, that's the biggest segment that is exported currently, followed closely by your pens and other writing instruments. So these are the two biggest segments that are exported currently. So, when you see other consumer segments, everywhere you will see e-commerce and quick commerce growing very rapidly. But this is a segment which has traditionally been distributed through general trade and continues to be distributed through general trade. Though there has been some shift towards e-commerce, but a large part of it it's still through the traditional general trade. 70% of the business is general trade. Institutional, which really or B2B sales is at about 20%. And then you have modern trade and e-commerce at about 5% each. Uh, so as I said, distribution plays a very, very important part. And if you look at the distribution strength of almost all the players that were there in the earlier slides, Flair has the largest distribution network with 3,15,000 outlets, followed by Cocoyo Camlin, which has been in business for a long period of time in India at about 3 lakh retail outlets. Link is at about 2.5 lakh. DOMS is at about 1.15 lakh. Luxor and Unomax is about somewhere between 60 and 80,000. So the reason why Flair, Link, Kokuyo are higher in terms of distribution reach is that pens are the most distributed products. So whichever company is into pens will have a larger distributor network, especially the retail touch points. DOMS has low touch points mainly because of that. They recently entered into pens, and they expect that to grow that segment very fast going forward. So you will rapidly see this number growing towards this number once they scale up the pens business. So, what are the key growth drivers for the stationery market? One is obviously the favorable demographics. As I said, younger population would require more stationery. Uh, more people going to the offices would require more stationery. More senior citizens, and you'll require less stationery. So, as the population ages, the demand for stationery products reduces. Second is obviously the increasing literacy rate, which we have seen across the board, be it urban or rural, that has played a role in terms of the demand of stationery products. Inclusion of art and craft in the curriculums over the past 10-15 years has played a role in terms of demand for these products, not only in the schools that they use, but also when they learn it in the school, they come back home and do it on their own. So that is something which is we sitting in Mumbai think that this was always there, but when you look at the rural population, a large part of it didn't have this. Increasing private coaching, so the more classes you go, the more stationery you require. Gifting trends, so when you go to birthday parties these days, so I have two young children, so I go to a lot of these birthday parties, and the most distributed gifts when you win any game or anything would be these stationery products. uh, Impulse purchases. So when you go to a shop, a retail outlet, probably you would buy one pen, or if you like something, you will buy something. So as I said, writing instruments is a segment which is the fastest growing, and this is the focus area of most of the players that are there in this industry. So let's look at it in detail. So the currently the writing instruments market, as I said, is about 13,000 crores, which is expected to double in the next 5 years. When you break down that 30,000 crores, about 10,700 is pens, 1,650 is pencils, and the balance is markers and highlighters. And this is expected to go up. Pens again is going to double, pencils double. Almost everything will double in the next 5 years, growing at a 16% CAGR. If you look at the volume of these products that are sold, you won't believe that there are 1,000 crore pens being sold in India, 400 crore pencils, and 50 crore markers. So this volume is huge. Now, if we break up the market not only by the segments but also the type of writing instruments. So pens is at about 80% in terms of volume. Pencils is at about 12% of the market, and markers and highlighters are at about 8% in terms of volume. When you break up pens, ballpoint is at about 68% of that 80%. Gel pens are at about 20%. Roller ball pens are at about 12%. In pencils, wooden pencils dominate the segment with about 92% share. Polymer is at 7%, and mechanical is still at 1%. So that's very, very low penetration of mechanical pencils. If you break up this segment price wise, so if you look at pens, mass market is nothing but up to rupees 50. That's about 80% market share by value. The leading players here are Link, Flair, Cello, and now Downs has entered into this segment. In premium segment from 15 to 400, you would have Luxor, Cello, Pep, Flair with their brands. More than 400 would be Parker, Mobla, etc. That is around 4% of the market. Now, when you look at the pencils, mass market is about up to 5 rupees. That's about 85% of the market. You have DOMS and Hindustan pencils. So, these two players constitute about 80% of the market. At one point in time, Hindustan pencils used to be as high as 60-70%, which has now come down to about 50%. Balance is now DOMS. Uh, Premium, which is 5 to 20 rupees, is about 14% of the market. There you have Coco or Camlin in relation to that, those two players. And in super premium, which is more than 20 rupees, that's only 1% of the market. There you have the global players, Faber Castell and Stereo. So, looking at how the market shares have moved in this particular segment of writing instruments, you will see that the numbers that I have written in the graph, those are the players that have increased the market shares. So, if you see, DOMS has increased from 7% to 21% in the last 10 years. uh, Hindustan Pencils has remained flat or in fact lost some market share from about 22% to 20%. Flair Writing has grown from 10% to 30%. Kokuyo Camlin has reduced the market share from 16% to 11%. And then you have newer players like Unomax through Cello World, which were not existing in FY15. They started business only in FY19 and now are at about 2-3% of the market. So, in this kind of a industry where there are a lot of unbranded players, what are the key competitive advantages that any player can have? One is to have a diversified portfolio, be there across segments, be there across price points, maybe have different brands for different price points. Second is to have differentiated products. Now, someone will say, What will you differentiate in a pencil or something?" But a lot of players have innovated a lot from hexagonal pencils. People have moved into triangle shaped pencils. They have launched groove based pencils. In erasers and sharpeners, they have launched a product which has both combined in a single product. There are many innovations which have happened in this segment, and differentiated products is probably one of the competitive advantages. High brand recall, because when you go to a stationery store or a retailer, he will have all the brands. So if the consumer doesn't remember your brand, if the consumer doesn't ask for a Natraj pencil or a Apsara pencil, then probably you will lose out to your competitor. Fourth, as I said, to have presence across price points so that you don't lose out to your competitor. Have a multi-channel distribution in place. Yes, general trade is important because that's still 70%, but you need to have presence in modern trade e-commerce as well. And lastly, backward integration. So by backward integration in terms of pens, I mean having tips manufacturing in house, or in pencils, have the erasers which are attached to the pencils, or have the whole production or the backward integration, all the raw materials that are used, have it all in house. So a lot of players are now working towards that. That not only enhances your margins, but also helps in supply chain certainty over the longer period. So these are the listed Indian players that are there. Just a brief snapshot of the six listed companies. DOMS, the market cap is 70,800 crores. The price to earnings is 90 times. Dividend yield is 0.09%. And this got listed only in December of 23. As I said, these, and the advantage here is that they have a large variety of products and they are diversified across product segments. Second is Flair Writing at about 2,700 crores market cap. The price to earnings is at 23 times. They don't pay out dividends. This also got listed only in December of 23. Uh, And this Flair Writing has the highest margins because it was mainly into only into pen segment, which is probably the highest margin segment amongst the stationery products. And after that comes the art and hobby craft products, which have higher margins. Cello World is 12,860 crores, but only 15% of their revenues come from the stationery segment. Rest is your houseware, consumer houseware products, example. Uh, P year is 38 times, dividend yield is 0.26. This also got listed somewhere around November. So if you look, these three companies got listed around the same time, and that's where this industry got some interest from the investors. Kokuyo Camplin is a small player at about 1100 crores market cap. The P seems high mainly because it has been generating profits in some years, losses in some years, but over a longer period of time, it has not been able to make substantial profits. It got listed in 2006. Uh, Link is at about 670 crores. The margins are good. The return on capital is good, but a very, very small player at about 650, 700 crore kind of market cap. 18 times earnings. And it also got listed in 2006. Navneet Education is at 3,300 crores, 16 times earnings. It got listed in 2005. So we look at the first three players because they are the bigger ones. These two are the smaller ones. So let's look at DOMS first. So if you look at the history of DOMS, it was started by two partners, Raveshia family and Rajani family. The two partners started off in Umargaon in 1973, and at that time they were doing contract manufacturing for other brands, so they did not have their own brand, which is DOMS now. In 2001, unfortunately, one of the founders died in a accident, and his son took over. So that's when they planned to have their own private label, and in-house they started manufacturing their private label. In 2005 was when the DOMS trademark was registered. Then in 2011-12, they actually converted all the partnership firms or the different firms that they have into a private limited company. And 2012 was when Fila, which is the global major, invested in the company with 18.5% stake. In 2015, they increased the stake to 51%. So they were the majority shareholder from 2015 till the time IPO happened in 2023. Over the last 7, 8 years, they have made a lot of acquisitions. They have entered into a lot of adjacent categories. We'll look at them in the next slide. In 2023, as I said, they got listed. So this is the shareholding that they have. The promoter shareholding, which was 75% at the time of the IPO, has come down to 70%, mainly because Fila sold off about 20% in the IPO, and recently in the last few months they sold off about 4.5%. Rest is held by the Indian promoters, which are Ravish and Rajani family. So who is Fila? Fila is a Italy-based stationery company that has been in existence for over 100 years. It operates in more than 150 countries across Europe, North America, Latin America, and Asia, everywhere. It has 22 production facilities across the globe, including India. The calendar year 24 group revenues were somewhere about $600 million, and they have 25 brands that are there. So currently, a lot of exports to the Fila Group happen from China, which Fila Group is wanting to export from India. So maybe in the future years, we'll see some exports starting from India as well. So What this type does is that it gives access to Fila's R&D expertise. Uh, it also does contract manufacturing for some Fila brands, and you get the manufacturing expertise of DOM. So combined, it's a great synergy between these two partners. And lastly, they also get exclusive marketing rights for these four brands, which are Canson, Delaroni, Lyra, and Memory, in 7 countries which are nearby India. So that is also an advantage, added advantage for DOMs. If you look at the revenue split for this company across segments, so a large part of the business is coming from school stationery and art material. 45% of the business comes from school stationery. Art material is at about school art material is at about 27%. Paper stationery is at about 9%. They have a lot of kits and combos which they sell, which will have products from each of the segments that are there, and they are used in gifting. So that's about 9% of the market. Office supplies is at about 7% of the revenues. So over a period of time, they have tried to diversify their revenue base across segments. So, school stationery, which was at one point at about 72% of the revenues, has come down to now 44%. Whereas the art material, which was at about 9%, that has gone up to 27%. And then there were some segments which are non existent, which have grown rapidly and which constitute materially to their revenues now. So, there were diversified product base across categories now and across price points. Again, moving revenues from stationery to art material would have an impact on the margins as well, because art materials are typically more EBITDA margin products. Uh, Again, as I said, one of the advantages that these companies can have is having products across price points. So, uh, just to give some examples, pencils and geometry boxes are very big segments for DOMs. So here also they have products from less than 5 rupees to even more than 20 rupees. In geometry boxes, from about 100 rupees to more than 250 rupees. So again, all of this is backward integrated as well. So it takes that competitive advantage as well. So as I said, these are the brands that they have. The flagship brand is DOMS. In rural markets, to launch cheaper products, they started a brand which is now called C3. But they would have somewhere DOMS written over there. So in all the brands that we see, they'll have Amaris by Dongs or Clapjoy by Doms, or now they've branded the diapers from Wowper to Dom's Wowper or something like that. So Doms will always be there in the brand, and they are creating the brand value in the Doms brand. So as I said, over the past few years, they have entered into a lot of adjacent categories. So they acquired 64% stake in a company called Pioneer Stationery. So that company was into paper products, so that helped expanding in that segment. Clairjoy Innovations is a toy company which in which they acquired a 30% stake last year. So now they are into toys as well. Microwave Woods is a packaging company, and that can be used here. So when I said backward integration, a lot of it can be seen here as well. So all the packaging that they need for their products, especially the kits and combos, is being done by Microwoods Private Limited. Skido is into school bags, plastic bags, pouches, etc. Uniclan is into baby hygiene products with that Bowper brand. So uh, a lot of questions were raised when they acquired this stake in Uniclan Healthcare, especially the baby hygiene segment. Uh, but this is what the management had to say. The company intends to continue to actively pursue strategic investments and acquisitions in its focus area of kits, children and young adults, which are complementary to its business. So they now intend to acquire stakes not only in stationery companies but also products which kids will grow up with over a period of time. So from school bags to toys to baby hygiene to everything. Let's look at Flair now. So this company was started in 1976, so almost a 50-year-old history. That was when Flair was registered. Uh, it has a lot of factories compared to DOMS. So DOMS has only two manufacturing locations. One is Umargaon and second is Jammu Kashmir, where they manufacture pencils mainly because wood is easily available there. Whereas Flair has a lot of factories across India. Uh, so they have in Daman, Dadra, Nagar Haveli, Dehradun, Naigaon, Valsad, etc. 2012 was when they acquired the trademark for Beer Garden brand. Uh, 2008 they launched the Flair calculators. 2019 was when the creative brand was registered, and then they launched these art products under that. 2016 was the time when they actually converted this into a private limited company. 2014 they acquired the rights for a Hauser brand. 2022 they started a new brand and pens which is called Zooks. And last year they entered into steel bottle segment, which is again an unrelated diversification for them. If you look at the promoter stake in this company, it has remained constant since the IPO at about 78.5%. They will eventually have to come down to 75%. And this is owned by the Rathod family. If you look at the breakup of the revenues across segments, so 83% is in pens, 15% is in creative segment, and 2% is steel bottles and houseware segment. So here again, they are present across price points. So less than 15 rupees, they have two brands, Flair and Hauser. In 16 to 100 rupees, they launched a new brand which is now called Zooks, and apart from Flair and Hauser. And then more than 100 rupees, mainly it's beer carded that they have. So Flair was also mainly into contract manufacturing for other OEMs. Slowly and gradually, they have started to move away from that and having manufacturing for their own products. So in terms of revenues for their own brands, it was about 300 crores in FY22, which went up to as high as 840 crores in FY24. So as a percentage of revenue, own brands revenue went up from about 50% to 86%. So this helped them in the margin profile as well. Uh, Leveraging through partnerships. So they have had two partnerships. So one is they have signed a licensing agreement with Disney for some of the characters, and they have launched a lot of stationery products with those Disney characters. Second is, as I said, they have entered into an agreement with Maped for distribution of products in India. Maped is a French stationery company with about 80 years of experience and presence across 120 country. And Maped products will be targeted towards premium price points, especially the Flair creative segment that they are into. Coming to steel bottles, so as I said, that was an unrelated diversification that they made. So it happened by accident. One of the OEMs that they used to supply pens, they said to manufacture steel bottles as well. So they started a manufacturing line for that. And then when the time to supply came, suddenly the order was cancelled. So that's when they said, let's tap the domestic market for that steel bottles, and they tagged the domestic market through the modern retailers. And over the last 2 years, they have been able to grow that. They have also entered into other houseware segments like carousels, storage containers, etc. Because if you go to a distributor to distribute only steel bottles, they'll not probably do it. You need to have a bouquet of products to be able to tap into those distributors. They are the highest ad spend company in this industry. So when I say highest ad spends, it's only 2% of the revenues, but others don't even spend that much. So they have all the Bollywood superstars, Ranbir Kapoor, Ranveer Singh, and a few others as well. Let's go to Cello now. So, a brief history of this company. This company is also owned by the Rathod family. So, they are cousins to the promoters of the Flair family. 2 generations back, they were brothers, and then they split up into different company. And in 1988, they started a company which is Wimplast, which is into plastic furniture. In 2009 to 15 period, they sold off the writing instrument business of Cello to BIC Clichy, as I said. Then they entered into opalware and glassware products under the Cello brand. And in 2018, they converted this into a private limited company. 19, when this no compete clause ended with BIC, they again entered into the writing instrument segment with the Unomax brand. 22 was when they received private equity from ICICI Ventures and Tata Capital, and 23 was when they got listed. In 2024, they did a QIP of 730 crores, which helped them dilute the promoter stake to 75%. So they have a lot of subsidiaries. They have a lot of businesses that they are into. So just to give you a brief, Cello Consumer Products is into plastic and stainless steel household products. Say Cello Industries is into opalware and glassware products. Houseware, Cello Houseware is into houseware and insulateware products. Cello household products is into houseware again. So one again, both of them are into houseware and insulateware products. Cello consumer wear is into glassware products. Unomax, as I said, is into writing products, and then Wimplast, which is a separate listed entity, that is into the molded furniture product. The interesting part of this company is that the listed company does not own the Cello brand. So the promoters have a separate entity which is called Cello Plastic Industrial Works. So this is a separate company. This owns the Cello brand, and they sub-license it to the listed company at a royalty of 0.5%. So that's what they pay. Uh, One is that. Second is BIC has filed a case against the promoters of this company for violation of the agreements, the shareholder agreement that they had with them. So there are some litigations and there is some corporate governance issue in terms of the brand that they have. So this is a risk where maybe promoters in the future may want to increase the royalty rate or do something with the brand. So as I said, they are into three segments, but a majority of their revenues come from a consumer wear segment, which is 66% of the revenues come from there, and the EBIT is about 24% margins. There they are their Cello brand, so they were allowed to use the Cello brand for all the other segments apart from the writing instrument segment, which they sold to BIC. So here they are into houseware, insulateware, cleaning aids, electronic appliances, glassware, opalware, porcelain, etc. In writing instruments, they have Unumax, which is about 16% of the revenues, and the EBIT margin is at about 25%. Molded furniture, which is through Wimplast, that's about 17% of the revenues, and the margins there are at about 21%. So if you look at looked at the EBIT margins in the first slide. If you look at the gross margins, furniture is probably the least gross margin business at about 45%, whereas writing instruments and consumer wear are a good gross profit businesses for that. So these are the products that they are into. Wide product portfolio in terms of consumer wear, but in terms of writing instruments, they are still gaining ground because it's been only 5 years in that business, in the new of that, and they are trying to grow the distribution strength as well as grow the product basket over there. So if you look at the writing instruments business, which we were discussing earlier, that has grown at a pace of about 44% CAGR in the last 4 years, from what 111 crores to 334 crores. Cello writing instruments business has the highest EBIT margins when we compare it to the other only writing instruments or the pens business. So it has about 25% EBIT margins compared to 18% for Flair and 9% for Link. And if you look at the revenue CAGR as well, it is almost at the par with Flair, which is the largest player in pens. Now let's look at the peer comparison amongst the 7 8 players that we had, and look at all the financial metrics. So these are consolidated margins. So if a company is into various segments, it will be a mix of all the segments that they are into. So DOMS is at about 35% gross margin, Flair is at about 45, Hindustan Pencils at 38, 37 for Kokuyo and Link. Now Neil is at 50% gross margin. Uh, Luxor and BIC are very high in terms of gross margins, but in the next slides, when you look at the profitability of these businesses, you will see that they are loss making and actually not that well run. So if you look at the EBITDA margins, Roreto is at -5%, BIC Cello is at -30%. Flair is the highest at about 19%. Navneet is at 16, Dons is at 14, Link is at 10, and Kokuyo is at 7. In terms of return on capital, so this is a 3 times gross fixed asset turnover business. So if the margins are well within the range of 15 to 17%, you will make a decent return on capital. So even small player like Link would have a 20% plus kind of ROC. DOMS and about 28%, Flair writing is at about 25%, and then you have players which are not that well run. BIC Cello is at -49, and this one is at -22. Similar trend in the return on equity numbers as well. So we have looked at all the good parts of this industry. Let's look at the risks that are there. One is the obvious one of raw material pricing risk, like any other business. Second is environmental concerns. We all know how the paper is made, how wooden pencils are made. So that remains a risk here. Third is digitalization. More and more shift towards digitalization would require less and less stationery. And fourth is new competition coming in because some of the distribution shifting from the general trade to e-commerce over a period of time. So these are the major risks that I see for these businesses. Otherwise, if it is well run with a decent margin, decent turnover, it's a 22% kind of a ROC business. Thank you. Happy to answer any question.
You mentioned that pen writing instruments was the highest margin, right? Where I think you said had 83% of their products in writing instruments. So Flair has the largest share of the most profitable product. And while you were doing this, I was just quickly going through the balance sheets of Flair. Uh, Sales are steady, profit is steady. Cello profit, profit is also steady. So if Flair is in the highest margin business doing 83%, what are they doing wrong? And whereas you said that DOMS has not even entered the Pales business, which is the highest margin business, and DOMS is growing beautifully. So I just studied, made a quick, 5-minute study on the balance sheet. So DOMS is doing something really right, and which is why it's growing. The share price is growing, and both these other companies, since the time they've come, they've only been done, from an investor standpoint. So naturally, and they are kind of related, right? Flair and Cello in that sense, because you just explained that. There's something which is not right about their strategy, something which DOMS is doing really nice. So if you can just, put some more details.
Sure. So two parts to this. You're right that pens is the biggest segment for them, but at the same time, a lot of it was contract manufacturing for other OEM brands, because of which the margins were lower in the last couple of years, which over a period of time has gone up. So in one of the slides, I pointed out that they were about uh, large part, the 60-70% was to other OEM brands, which has now come down to 40% of their revenue. So now with their own brand doing well, they'll probably the margins will move up a little bit. But again, they are entering into newer segments like bottles, houseware, etc., which are typically lower margin businesses. So on a consolidated basis, you may not see the margin improve. Exactly. And on DOM specifically, so one is when I wrote all the competitive advantages, they have really done well in the product innovations part. So if you look at the products that they have launched, they are able to command a higher price over there and hence higher margins. So when you look at their kits and combos business, so instead of selling one or two standalone products, if a kit is being sold that will have 7-8 products, it will give a higher margin to them, and that can be utilized very well in the gifting business. So that is one thing. Second is they have done a lot of backward integration DOMs, so that has helped them in terms of margins. Third is, as I said, they have manufacturing only in two locations, mainly Umargaon. Jammu is a very small factory. That helps in terms of overheads for them as well, which is a risk also because it's concentrated at one place, but at the same time, the overheads also are lower.
Show us that slide of the journey of something I wanted to also, since you mentioned, there's something, yeah. So, I mean, here we are seeing that, of course, Fila picked up a great stake. So that means all this was innovative products. They got their brand and they've also entered into BTS segment. What is that BT for?
Back to school segment, which is your school bags and pouches and all that.
So that means they've got enough opportunity. That one, baby care, hygiene, then they've got their typical pencils. Pails is what they're coming in.
So Clapjoy is the toys business that they entered into. Uh, this one, Microwood, is the packaging business that they entered into. So doing a lot of adjacent categories.
So they're acquiring and innovating. And that's what is basically making them grow at the kind of pay. Because they're growing, even if they're commanding a 90p, they're actually growing at about 40-50% year on year.
Yes,
So
that's correct.
very interesting. Thank you.
So, considering this industry is expected to go at CAGR of 2.8 to 3%, what is really making 90 plus E for typically two companies? What is attracting people?
So as I said, there are very less actionable ideas in this industry. So when you have only one player which has more than 5,000 crore kind of a market cap. That's the only play that you can have if you want to have exposure to this industry. So one reason may be that. Second is, as he said, if it's growing at 40-50% with improving margins, people expect that over the next 4-5 years, the valuations will take care of itself. So that may be the reason.
Hi, this is Hitesh. In one of the slides, you mentioned most of the production is still housed in these developed countries, right? And I believe it is a very labor-intensive process. Also, at least the writing instrument is. Any reason why it is still housed in these developed countries and not outsourced to China or the other Southeast Asian countries?
Yeah, so a lot of production happens in China as well. So as I said, one third is in US, one third is in China now. Some of it is moving to India, some of it is moving to South Korea as well. Uh, because these are typically low price point products. So transportation or logistics also plays a part. So if you are making a 5 rupee product and the transportation itself costs a lot, then it doesn't make sense to manufacture somewhere else. If the domestic demand itself is good, then it makes sense to have production within the country.
Okay, thanks.
Raj, thanks for the presentation. I actually want to pick your thoughts in terms of one, when it comes to the Indian players, why we have not really seen a lot of success stories out of India in the exports market. I mean, of course, they have grown their scale, but we've seen Chinese players who have done reasonably well, and we have seen a lot of stories. So, what according to you has happened there? And when you think about growth of this industry, again on a first principles basis, right? We're talking about writing instruments, which seems to be a more interesting sort of space or niche TAM of the overall industry. Why do you think that should grow at a high pace that possibly one might want to guesstimate? And then what could be the drivers in your assessment, given it's a highly penetrated category? How much could it be out of premiumization? How much could be of increase in ownership? I mean, your broader thoughts there.
Yeah, sure. So if you look at the global players, Germany, France, Italy, Japan, these are the four countries where probably the highest quality products are made. Whereas if you look at the Chinese companies, they make it cheaper because of the labor cost advantage and all that. So India is trying to position itself somewhere in between where we can provide a better quality than China, at the same time a lower price than these developed economies. So that's where we are. Uh, Sorry, on the second part, what did you ask?
That was just to pick your brains in terms of how you think about the growth for this industry. What could be the segments of that, and then where can growth come from?
So writing instruments could probably be one of the segments. The other segment which I think could grow faster is the art, creatives, craft, hobby, etc. So that's where typically Indian households have not spent too much time. They have not been interested in the past, but now with the newer generation, we have seen that they are more interested in these kind of activities. So probably we can see that segment also growing faster, but it's a smaller part right now, and on a low base it may grow faster, but still as a percentage of the market it will remain lower. So papers is the biggest segment, and that with the digitalization and environmental concerns may not grow faster, and hence the second highest is pen. So that probably is group will grow faster.
I mean, that's interesting perspective. I think my question was within writing instruments itself. When you say it's a 15% sort of a growth story, it becomes very exciting. When you say it's half of that, it becomes dead. So how do we get comfort as to whatever rate it can grow at? What could be the drivers of that? How much can come from volume-led growth? How much can come from premiumization? Is there even scope for that? I mean, how are your broader thoughts on that?
Yeah. So volume growth has been in single digits, somewhere around 5-7%. 50% of the growth has come from premiumization. If you look at the past 4-5 year history, so if you look at the investor presentations of most of these companies, they give you average realization that they get from the pen segment. So that has only gone up in the last 4-5 years. Most of them have almost doubled their realization. So given that all the companies have products across the price points, they are now trying to pitch more and more products in the higher segments, which may be in the 10 to 50 range and not in the highest segment, but somewhere in between, not the 5 rupee, 10 rupee kind of a product, but somewhere in between kind of a product which will help them improve their realizations and the margins over a period of time.
Thank you so much.
Hi Raj, thank you for the presentation. Just a quick word on something more about ITC and how it's doing in terms of the revenue and in terms of the margins, and also about their share in the writing instruments segment.
So not a lot of data is available for ITC because it is housed within the listed company and they don't give out a lot of data. But as I said, in the market share data, they have about 20% of the market share in the overall stationery market, which include everything, papers to stationery to everything. So if you assume the market size to be about 40,000 crores with a 20% market share, that should be in the range of 8,000 crores. That's the typical revenue size that they have.
What about the margins? Nothing. And their share in the writing instruments?
Again, not available. They've just in the last 2-3 years only they have entered into the other stationery product segment. So they were majorly into that notebooks and paper segment only. Only in the last 2-3 years they have entered into those segments.
Any more questions?
Anyone on Zoom has a question, please unmute yourself. Okay, I don't think there are any further questions. Thank you. Thank you, everyone.
Whenever things got rough, I always remember what my father used to say.
Running a business does test a man, my son. There are ups and downs, glorious highs, and sometimes a low that leaves you feeling defeated.
The character of a man and the character of a business are not very different, are they?
Yes, but when the chips are down, we must stand up, dust ourselves off, and motor on.
Volatility. It's a funny thing. It makes you question yourself and wonder if you've made all the right decisions.
Sure, you can question some of your decisions, but stay steadfast on your goals.
Dad always said, there are no shortcuts and no quick profits.
There are no free lunches, are there? There is only one
Right way.
At PPFAS, we think like Rahul and his father. That volatility is a fact of running a business. And buying equity shares is like owning a part of that business. We use value investing principles to manage your money. This means we invest in the right businesses at reasonable prices and for a longer term.
PPFAS Mutual Fund. There's only one right way. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.